Welcome traders to the live webinar with Admiral Markets. My name is Chris. Good to be back after a week break here of webinars where today we're going to focus on trading patterns, momentum, and support and resistance in the live Forex markets. First of all though, before we look at the charts, of course be aware that this webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details if it is suitable for you. Also be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Excuse me. All right. So, hope that you had a good week, good trading last week. Hope that you had a good weekend as well. Monday, of course, the market was a bit slower. There was a national day off in large parts of Europe, so including London and Germany. So not so surprising that the market, therefore, the Forex market too, was a bit calmer. Today, everything should be slowly but surely getting back into normal speed. Let's take a look at the Admiral Markets website very shortly before we take a look at the live markets. All right, there we go. I hope that you can hear me well. I'm actually broadcasting, having the webinar from a different location than usual. I'm actually in Italy instead of Prague. We're having a little bit of a break. That's why I had the week off last week. And this week also will take some time off. So it's pretty nice weather here. Prague, it's apparently snowing, almost snowing with 5 degrees or something like that. And here it's sunny and 21. So I think that was a perfect time probably to enjoy the spring and head off. That was unintentionally very well timed. So that's good news for me. But in the meantime, let's take a look at, I wanted to show you the calendar. I wanted to show you the heat map. And of course, don't forget platforms. After the webinar, you can check it out. MetaTrader 4 Supreme Edition and WebTrader, very useful for counting waves as well. Now, regarding the calendar, I don't think that there was basically the key, let's say, events were based in England, Australia, and the OPEC meetings on Saturday, as far as I remember. Of course, take a look at the usual events that do occur: red, yellow, green, all kind of levels of importance. But I think that the Bank of England and the RBA, indeed, meeting minutes, those were the major ones. Otherwise, I don't think there was something of a red tagged event that would really disturb the trading. But always check the calendar, of course, first of all. Regarding the heat map, you'll see, look at that, the heat map showing that lack of volatility that I already mentioned at the beginning. And you can see that all of these currency pairs kind of in the middle, no directional movement, not one currency pair reaching the 1 or minus 1% there, as you can see. But there was some volatility though. You see pound yen, pound New Zealand, euro yen, still making some ups and downs and still providing some potential trades there. All right, so let's kick off. I wanted to, today's focus is patterns, momentum, and support or resistance. So combining those things to make a trading plan. So first of all, let's kick off with the euro dollar. Not sure if you took a look at yesterday's video by any chance that I have on Admiral Markets. You can find that when you go to technical analysis, go to, excuse me, analytics, technical analysis. And I was talking about the fact that price might make a bounce at that blue support trend line right in here. All right, that happened indeed. And price broke above the level that I mentioned. I was talking about this 106.25 and indeed made a dash up to the R1 at about 106.70. So there's a small breakout there to the upside. Talked about the potential for a bounce and breakout yesterday. Today, I think there's a good chance that it will continue, that there will be a follow-through to the upside. So let's take a look at the daily chart first of all. You can see this channel in a way to the upside. Price is testing the support level of that channel and right at the bottom. So this is a pretty decisive zone in my opinion for either a bullish break, a bullish bounce or a bearish break. All right, decisive zone, point of confluence, as Netta will call it. So I think that a bullish bounce is more likely than a bearish break. So that's what I'm hunting for, and so far seems to be indeed happening. So let's see if that continues. And the reason is that price has already fallen pretty sturdily. As you can see, price has already made about a few hundred pip fall. So I think a retracement of that fall is likely. So what I did yesterday was put a fib from the top to the bottom. Excuse me. And I would be looking for price to hit the 50, 61.8 fib, maybe even the 78.6 fib. You see here a resistance spot as well. Potentially, there could be a reversal pattern like this if it reaches the 78.6 fib, as you can see. And price might turn at that level. So, you know, the 78.6 fib could equally be valid and interesting. So 50, 61.8, 78.6 fib, I think could be very interesting zones for a bearish turnaround and a restart of this downtrend. You see price has made a correction here, here, and here. Three-wave correction so far. Price seems to be trying to move away from that moving average again. Look, price is trying to pull away from it after a sturdy correction. That typically is difficult for price to manage. It is difficult for price to pull away from a moving average. So typically it hooks back maybe one or two times before it then starts to build strong momentum. So I think that could happen here too. I think it could make one more pullback before it then turns around and breaks through this channel, breaks through the blue support trend line. So that's one thing I'll be keeping an eye on. This month still, next month probably, those things will take some time to develop. In the meantime, there is space for price to move upwards in my view. And there's space for price to get to the 50 fib, let's say. Maybe even a small pause at the 38. So 107, but probably 107.40, 107.50 is you know, bullish space to the upside that I think could be filled this week. So let's take a look at the 4-hour chart. So you can see how basically this channel is working once again on the daily chart, and how I think that this will be used for a bullish bounce up to resistance. Excuse me. On the 4-hour chart, basically maybe a small little triangle here if you look at these tops like this. Price did not manage to break above the R1 yesterday. That's not so surprising. And it's respecting the long-term moving average and this trend line. All right, so kind of a mini triangle in a way here like this, or we can actually draw a new line like this on this time frame. And you can see that there's a triangle going on, looking at the orange lines, lower highs, higher lows. And I'm expecting this triangle to break to the upside as I already explained. So let's take a look at the hourly chart. Alrighty. So what could happen now, price is in the middle of this triangle. So even if it might turn and move up and break above resistance right here, I don't think it's a good spot. Either price completes kind of a zigzag like this down to the weekly pivot point, this green line, and those two trend lines. That's one. That could be a good bounce right there, around 106.25. Or price breaks above 106.70. Right here, I don't think it's interesting. From my point of view, right here, there's no edge. There's no advantage. It could really literally move up, then down, and then up again. Or it could go up, down, up, down like this. It could do anything in this triangle. It's difficult to know, and I don't think there's any significant edge by trading it here. But if I had to choose, I would choose upside and put the stop loss below the weekly pivot point, below 106. Now the reason for that is because price will could stay in this triangle for a while, but I am expecting an upside continuation breakout. So I would rather, although I don't think it's a good spot, it's in the middle of nowhere, it's in the middle of the triangle. If I had to choose, I would go for long because of the fact that I'm expecting that bullish breakout when looking at, those time frames and the support of the channel. So that's why, in my view, targeting 107.40, it's about a 50 pip risk. 106.50 is the entry. 105.95 is the stop loss. So it's about a 90 pip reward. The risk is about 55. So quick math tells us that it's about 1.6. It could be a bit different, but I don't have a calculator here. So let's just say 1.6 for the moment. R to R, reward to risk. Not bad, is possible. But let's think about the fact that if price were to fall down like this, of course, if it hits 106.25, the balance changes because then there is about 115 reward potential, and then the risk is only 25, roughly. Depends where you put the stop loss, but that would change it into about 4.5 to 1. So that is more attractive. So I'm looking for price to get down to the zone. It's possible when you look at the 50-minute chart, we see that there is a bit of, that there's a bit of momentum here. So there could be a zigzag occurring like this. As you can see, that could happen. This is a bit of a channel like that. All right, so could this channel break and head back down to that weekly pivot point? Yes, so that's something to potentially wait for, in my opinion. If price reaches to 106.25, there are a couple of options. One is a pending order at, let's say, 106.26, 106.28. The other would be a market order, obviously, for price to wait. Let's say for me to wait at that support to see a reaction, right? The price candlestick pattern, either a bullish candle on the hourly or 4-hour chart, a candlestick pattern, even on a 50-minute chart, an inverted head and shoulders, some pattern on that time frame, time pattern. What else? Even a move down, bounce, and a break. The break of this resistance spot, for instance. Excuse me, I have some lingering cold, unfortunately. So those are all options. We talked about entry tactics before, but we're going to talk about that again next week, Thursday. I'm going to be talking about entry tactics within market structure. So if you're interested in that, 27th of April. So those are some options there, but that's the zone that I'm most interested in. Now, if price does not get to that zone, the third option, I guess, is that price will break above R1. In that case, probably the way I would be trading it is waiting for a 4-hour candle. That is pretty good in size, probably 40, 50 pips at least. Candle close near the high, something like a candle like this. And I'll probably zoom in, look for a small hook back here to about halfway the candle, and then try to capture a bounce up to R2, up to R3. So that's, the alternative. If price does not get back to the weekly pivot point, but instead breaks out, then this is how I try to catch that breakout. If, of course, I'm behind the charts. So that will be the alternative. So it's good to know that there's an alternative, of course, that makes us traders more calm, typically. So that would be my backup plan if I don't get the price that I originally intended. So that's about it, I guess, for the moment. Let's see, we got one question. What's the name of this indicator for support or resistance? So you got a couple of them that I have here. One is the Admiral Markets Keltner band, which is basically part of the MetaTrader 4 Supreme Edition. You can find it here. Go to Platforms, click on MT4 Supreme Edition, and you can download it for free. And use it for free for demo accounts. You can test it for 1 month. Live account, of course, you can keep using it. And there are a lot of things: the mini terminal, trade terminal, tick chart trader, indicator package, and of course, within that indicator package is the Keltner, but also pivot points, which is what you see as well. I made the weekly pivot points. Other support and resistance things that you see here are the trend lines. Those are simply these lines. And moving averages, I guess. That's about it. Yeah. And fibs I added. So I'm not sure which one you were pointing at, but those are all the ones that I have on the chart. All right. So that's my view on euro dollar. If by any chance the fourth scenario, and I think, as I already explained, less likely, but if it were to happen, if today, for whatever reason, today's a bearish candle like this, with a close in the low, that's a breakout. That's a bearish breakout. In that case, no bullish bounce. Price is decisively continuing with its downtrend, and well, then I would expect price to make a follow through tomorrow. In that case, I would probably look for lower time frames, look at lower time frames, look for the potential for price to hook back maybe to the weekly pivot point, for instance, or get close to it, retrace about halfway that candle, and then fall and continue down to test the S1, maybe the S2 even, as it breaks to the downside. If that happens, let's take a quick look at this this higher time frame when looking at the weekly chart here. If that happens, right, then in that case, we already see large consolidation here occur. At this moment, slowly but surely, there is a bit of a downtrend occurring like this, very choppily. This was a very sturdy channel. But if that support line breaks, if that blue line breaks, then in that case, this trend could continue. This correction might be over, and the dollar might strengthen, or the euro might weaken, whatever, or both, and this euro dollar might start to fall again if this blue line breaks, at least to test or retest the previous bottom, this bottom, right? So around 103.50-ish. So that would be the consequence of a bearish breakout. So those are the scenarios that, what I think is most likely, what I'm looking for when, price makes a choice and starts to move and kind of follows the path of least resistance. So my task as a trader is to analyze and follow that path. I am if you compare it to a tango dancer dancing, the market is leading and I'm following. I'm not leading and hoping that the market will follow me. That's often what happens, and then traders get frustrated that the market is not doing what they think it should be doing. But of course, as we know, when you follow these webinars more often, you know that the market can do anything it wants. It's our task to be in line with the market. Not every time, of course, but in the long run. So that's on us. And the market has basically must do nothing, right? All right. So if you're new in here by any chance, please let me know if any of these concepts, are new. You would like more info. You would like more background. Just use the chat. Ask questions. Feel free to reach out and connect and ask me anything you want about this or trading, or perhaps you want to share your screenshot, show a setup, a current setup, an open setup, a potential setup, closed setup. Feel free to get feedback on that too. Preferably connected to this topic, but if not, that's okay too. No problems. Okay. All right. Next on the list, pound USD. So in my view, more likely to bounce here. But price action is quite sturdy, so it's quite persistent, and it's, from my perspective, quite challenging my analysis because there's quite some bullishness. I'm expecting a bearish bounce. My last level that I would expect to bounce is 126. And the reason is, if I put a fib on this swing high, swing low, which I consider to be one part of a larger correction, then this is the second part of a potential correction, and I'm expecting a third part, lower. That second part, where I have a 2, is invalidated if price goes through the 138.2 fib at 126.03. So if price pushes to that level, my analysis is invalidated, and the bearish bounce that I expected is not going to happen, which is okay. That's why I have confirmation and invalidation levels, and those things happen. You make an analysis, you draw your lines, you make conclusions based on that. Sometimes that's going to be good, sometimes that's not going to be, or not good, but sometimes the market is going to follow or not follow, but the plan is going to be in sync with the market. Other times not. That's just how it goes. But it's good to have levels, good to have kind of moments where we realize that we need to adjust the plan. When price reaches 126.03, price is indicating me that I need to adjust my plan. For the moment, when I look at the daily chart, I see that price has reached a resistance line that has been tested twice. And this is the third attempt. So from that perspective, on a daily chart, a breakout might be a bit more likely. So perhaps, when looking at the 4-hour chart, a bearish bounce seemed more likely to me. But if I zoom out to the daily chart, I see a different picture. So that's why multiple time frames is always useful. Now the daily candle yesterday was bullish. There was some wick. So let's take a look at that. The high and the low was about 72 pips. So the candle itself is 72 pips. The close was 33 pips. So 33 divided by 72 is 40%. 40% wick. What does that mean? It's indecision. It really doesn't give us much info, either for a bearish bounce or a bullish breakout. For those of you that have followed my support of resistance webinars in March, know that this is kind of an indecisive candle at a key resistance level, where on the daily chart we would be more inclined to a bullish breakout, but I think that both could occur. Considering the strength of this resistance level, there's the Keltner and the R1 as well. So there's a lot of confluence in this zone. So when looking at the daily chart, we might have to kind of reanalyze and say, okay, both could happen. Both the bullish break or the bearish bounce. But for a bullish break, I need to see a daily candle close above the R1, above the Keltner, above the trend line, and near the high. So there has to be a decent bullish candle for me to assess that a bullish breakout is likely. The candle itself shouldn't be too small either, which means that the candle of 70 pips is a minimum, I would say, preferably above 100 pips. These candle sizes will depend on the time frame. The lower the time frame, of course, the smaller the candles tend to be. So it's all relative. You got to compare it relative to the candles on the chart of the chart you're looking at. All right, so back to the 4-hour world. Daily for a bullish breakout, I'm looking at today's candle. So no action probably today for any upside, from my perspective. But if there is on the 4-hour chart, if there is a bearish engulfing twin here, or if there's a big candle with a wick like this, without breaking 126.03, without going above it, then that could indicate that indeed the bigger correction might occur as I expected last week. But let's see if that happens. Also, another thing to keep an eye on is this green trend line, because if price breaks through that green support trend line, that could jumpstart or kick off that bearish correction. The target for any potential bearish correction, I think, could be 125, 124.75 weekly pivot, and the minus 272 target. But it could extend. It could go down to 124.50, maybe 124.25. But I wouldn't aim further than 124 because of this bottom. Great, Vita. I got a chat here from Vita saying that Vita is new, but very interested in the thinking here about price action, support and resistance. Great to hear that, Vita. If you have any other questions, feel free to use that chat that you already have done. Great stuff. So Vita, I don't know how long you've been trading. Maybe you can share a bit about that if you have time, of course. Take it step by step. Maybe go through. We got a lot of YouTube videos on demo account. Okay, great. That's great. It's always good to start on demo, get your feet wet a bit. Absolutely. I have nothing against it. I think, some traders don't like demo at all. And I understand that demo, of course, has a disadvantage that you don't have the feeling for taking the risk in real money, right? And so I understand that perspective, but I disagree with the fact that demo is not useful. I think it is useful. It's a good starting spot to test how the platform works, of course. First of all, how does this MetaTrader 4 Supreme Edition handle itself? How can you use the minute terminal, etc. But also from strategy perspective, risk management perspective, it's good to test it for a while, even months. Then, of course, it's not a bad idea if you feel confident to take a small account and take some smaller trades with low risk. Doesn't have to be too much, but just to get a feeling for testing a strategy that you perhaps like or have tried out and it works on demo. Then you can take the next step and trade a bit, just a bit, very low risk, because anyhow it will be any risk will already be exciting in a way, and that's logical, right? And it could be nervousness as well. And just try a micro, for instance, right? For a couple of weeks and see how that goes. And then you can test the trading psychology aspect more if real money, even if it's small, is on the line. So that's typically what I say is a good way to to approach it. And whether that's months or half a year, that all depends on how you feel, how the trader develops, what you've learned, how comfortable you feel with implementation. That's a timeline that is really so dependent on each trader. Yeah, exactly. Vida says, I need to construct my mind to trading first. Absolutely. Get used to the patterns, watch the market flow, how it moves. It's all part of building that experience. Building that experience, however, be aware, I don't want to burst your bubble, but it takes time. Just be aware that it's a process with ups and downs. But if you're committed, if you like it, if you're interested in it, that will help you kind of push through those times where you have ups and especially the downs, and you'll be able to gain that experience. All right, dollar yen is, in my view, and I explained that yesterday already in my weekly video on Monday, hooking back. I said here, I'm looking for a pullback up to the weekly pivot point or this fourth purple line for a continuation down to 107.50-ish. down to the weekly S1 level. And now, first of all, let me clarify these lines quickly. These are Fibonacci sequence levels. It's maybe a bit too long to explain the exact details, but this is the baseline. Why do I use it as a baseline? Because this is a top. Here, as you can see, price was falling. So that's the first top since it was falling. Then this is basically there's 55 pips between the pink and the first purple line, because on this time frame, 55 pips is kind of the first move. So this is the first level, this is the second level, because that's 89 pips, this is the third, this is the fourth, this is the fifth. The best zones are between 3 and 4 and 4 and 5, or sometimes 5 and 6, depending on the currency pair. Pound yen likes to move a lot. From my point of view, therefore, target 5 is still open, as long as it stays below the R1. So I think that therefore is a good chance that price will get to the S1 still, and the fifth level. I don't think that if price does break above 110, which is a psychological round level, all even numbers are, quarter levels too, plus these bottoms I think should stop price. If it doesn't, then I would be cautious with the bearish trend and the bearish analysis. Okay, so this third level I think is the max retracement it should do. So either this fourth level or the third level I think should create a bearish bounce down to the fifth level and S1. And if price were to break above this, then I would be neutral. This is bearish resistance. So price has already reached the fourth level. It could still continue and kind of push further up to the third and perhaps even retrace up to 110. I don't think it will happen, but it might, and it still would be valid. My analysis would still be valid, and the bearish rejection or reversal could still happen and could still be part of my kind of analysis and plan. Personally, I do think that this will be most likely turning spot though. So now one thing that is a bit maybe less pleasant is this daily pin bar. Looking at it from this perspective, this candle is not so good for shorts. Look at the wick, look at the bullish close. So that's a bit risky. So we got to take that into account when, or I'm going to take that into account when analyzing this currency pair. Now the thing is that yesterday's high has already broken. When you see a pin bar like this, one thing that typically happens is that yesterday's high gets broken. That has already happened. So the minimum has already kind of been checked off. But I would still be cautious in general. Let's take a look at the hourly chart now. All right. So let's put a fib from here to here. That's that same swing that I talked about. And see how far this retracement could go before a retracement, or I mean a reversal is likely. So the fourth level is one thing, and the moving average is another on this hourly chart. This is the long-term moving average, 144 EMA close. But we see that the weekly pivot point and the 38.2 fib specifically is a bit higher. So from this perspective, indeed, a bullish bounce that goes a bit higher is probably the most likely. That does not mean that price might not dip here and then bounce up to that level and then bounce again for a downtrend continuation. These ups and downs, these waves are typical for the market. And that's why, you have the wave analysis each morning from myself on Admiral Markets website to explain why market makes these motions, these dips, these ups and downs, and what could be perhaps the next piece of the puzzle within this jigsaw puzzle, right? So a three-wave correction up to the 38.2 fib or a triangle like this, for instance, price makes up, down, also very likely, and then a break, or a flag. But a flag does not seem likely at this moment. Price would need to bounce, then rise, then bounce, then rise, and make something like this. It could still happen, but at this moment, this bullish part does not kind of seem to fit within a bear flag pattern. So I think either a triangle or a zigzag seem to be, a zigzag is this, seem to be the most likely kind of corrections. So from that perspective, I'm looking for the most interesting trade in my perspective is a bearish bounce, bearish, even like an engulfing twin, some candlestick pattern, maybe even a pending order. I'm not a big fan of pending orders, but sometimes I do use it. I like waiting for candlestick reactions, for instance, at this zone would be great, I think, right? More entry tactics, once again, next week, Thursday. Max 50 fib and the 110. So will price make this dip before rising? Let's take a look. 1, 2, 3, 4, fifth candle. This candle, I think, is pretty important. If this particular hour, 23 minutes from now, closes and it didn't break this high, I think there's a pretty good chance that price will make a zigzag here. I don't think I would want to trade it personally, considering yesterday's strong bullish candle and pin bar, but just analyzing it, I think there's a good chance. I wouldn't want to trade it, but analyzing it, yes, I think that could go down to the minus 61.8 or minus 1,000 target and then bounce up to that level I just mentioned. And the reason is time perspective. 6 hours not breaking this high indicates that this swing high, swing low could be over. When you look at this swing and you start to measure all those candles, most candles have higher highs, except a few. Those few still, like these 4, still saw the 5th candle breaking it. Here, 1, 2, 3, 4, 5, 6th candle breaking it. Here, a break after 2 candles. Here, after 1 candle. Otherwise, the rest of these candles had higher highs. So if a 6th candle fails to break the high here, there is a good chance, according to my analysis, that this and research, that this swing high, where I have the blue circles and blue line, is over. Therefore, we might expect a new swing, something like this, that could happen in 3 waves, and then a new swing up like that, like this. On a 4-hour chart, that pattern, that pattern like this could bring it up to the 38. That would correct a 3-wave pattern, a 3-wave correction, typically in ABC. And then this resistance level could then be used for a downtrend continuation down to that 107.50 area. All right, so well, let's see. Once again, I don't know. No one knows. The market doesn't even know, right? Time will tell. But this is my approach and my confirmation invalidation level. One more thing. How about if price doesn't get up to 109.50? It's possible. Well, one thing is that if price were to make a triangle like this, then the bearish break below that triangle would be something that I'm also interested in. But that triangle probably would not happen today. What will happen if the triangle occurs is that today's candle will probably end up like a doji, which means that yesterday's bullish pin bar has, that the effect of yesterday's pin bar has kind of resided. It's less important because today would end up like a doji, and then tomorrow we could see then a continuation to the downside. That could be an alternative scenario as well. But that's something that probably will happen tomorrow or Thursday. All right, so those were the three majors. We spent a lot of time with them, 40 minutes. Wow, the time flies. Vita, that's great. That's exactly, I can see you got the right mindset. I'm happy for that. You know, many, or not many maybe, but a decent amount of traders have the opposite mindset. So great job. And if you like analyzing, then, you know, then it's a hobby at the same time, which I think is way better because it's easier to be persistent. It's easier to be persistent if you like it. So that's great news. All right, some other things that are happening. If you have any preference for a currency pair or financial instrument, just let me know. Regarding the yens, the euro yen, I think, by the way, well, it might be at the bouncing spot. The euro dollar is at the bouncing spot too. It did reach the 61.8 fib. If I put a fib from this bottom to this top, so that could be a bouncing spot or a retracement spot, I should say, perhaps. But not a good spot to trade right now. It's at the pivot point, which could be a resistance. It might be interesting, excuse me, if it makes a hook back and then bounces up like this, like a three-wave correction. I still think that all in all, it is below resistance, even if it makes that correction. If you put trend lines like that, you can see the moving average is all the way here, for instance, right? So I wouldn't be too greedy in aiming for upside targets, but maybe a correction like this could occur up to the R1, for instance, and then the downtrend might continue still. I'm not too sure about this euro yen, to be honest. I don't have a particularly strong opinion about it. 61.8 fib could be the bouncing spot where price makes a strong rally. However, considering this downside motion, who knows? It could make a small correction and fall down to the 78.6 fib. So I'm open to it all. I think that at this moment, though, a three-wave correction is pretty likely. When you count the candles, this swing high, swing low is probably over. Gold is breaking above the top, reached the minus 272 target. Well, I still am leaning towards a bearish correction first. I think that this will probably make a rally eventually. Considering this momentum, I think that this is a correction and price will make one more rally like this. Okay, a three-wave up. But I'm not sure if this is this could be the start. But I think that there's still going to be a hook back before making a more sustainable upside. There's divergence between these tops. So I would be inclined on gold for price to maybe even fall back to the 50 fib, for instance, 61.8 fib, around 1200. Now, I'm not sure if this will be the turning spot, but yesterday's candle was pretty bearish, so it could be. So retracement here might occur. The best way to trade it, I think, is first to wait for some momentum to occur, then wait for some pattern or flag, and then try to trade the break or the turn of the flag. Aiming for the 50 fib probably would be the best, maybe 38.2 fib. Honestly, does not seem to be that interesting. It is pretty choppy, and I'm not a big fan. Kiwi is also not that interesting in my view, at least. Pound yen seems to be making the same pattern there. This looks like a good breakout candle on the Euro. Look at that. Pretty good strength. Let's see. High-low difference, 60 pips. Not bad. Pretty good size candle. Strong close near the high, indicating bullish control. Break over the pivot point. We can see that there has been a substantial correction already, but before that, an uptrend. We see that price is still far away from the top, which means that there's some space for price to move up before hitting resistance. And yeah, the monetary meeting minutes creating some bearishness on the Aussie dollar, 23.65 bounce. I think the best would be probably for a 1 hour bull flag. Maybe if it hits the minus 272 target like this, bull flag, break of that bull flag, and price should continue up to the minus 61.8 and the R1 at the very least. All right, S&P 500 struggling here already for how many weeks? Let's take a look. 1, 2, 3, 4, 5, 6 weeks. So that is the number I was looking for. I don't say necessarily that now the reversal is going to take place. It's not a must, but I did say that this bullish rally, at the very minimum, I would need to see 6 weeks not breaking a high before I think that this bullish rally might be having some kind of signs of weakening. And that took a while because you can see that this upside here and here was strong, kept going, higher highs. Finally, 6 weeks not breaking this high. So there seems to be some pause. At the very minimum, there's a pause. Now, how far this correction will go, I'm not sure. We'll have to see if this is a bull flag that will eventually break again, or this is more a deeper retracement or reversal. Looking at the daily chart, it looks more like a correction, to be honest, so far. And at this moment, there's a bit of a triangle being built. But you never know. Keep an eye on both these trend lines. I think the bullish breakout might take some time before it happens. Let's see, because looking at my time factor rule, I would say I would not be interested in any breakout this or next month, personally. But yeah, that's of course just one factor to consider. Most important is probably to see how price responds to these support and resistance levels on the S&P 500. Oil, big rally up after a strong break of this rising wedge, strong break of the blue lines, back to support. We talked about it, that this is a bouncing spot at the trend lines. Remember, divergence between these bottoms and the break of this orange trend line could send it back up as a bounce and break, and that's what happened. Significant rally after the bounce and break. Price moving from 47 to 52, so that was great. Now it's back at resistance, and I think it could be not a good spot to trade. And I would probably just wait for new candles to arrive. I don't see anything necessarily right here. And last but not least, the DAX. All right, there we go, the DAX. Yeah, also struggling with this potential double top. 2 bearish candles last week and the week before, indicating a potential reaction to this resistance level. So here too, which I'll make red. Here too, I don't see anything particularly of interest at this moment. All right, if it does bounce, it will probably have to break. At the very minimum, I would need to see some momentum. We need to see a break below this support trend line. Let me make that blue. There we go. This channel is still strong and would need to break at the very minimum. I would like to see it break before any correction might seem reasonable. All right, so that's about it. Regarding some of these stock indices, some of the commodities, and many of these currency pairs. I didn't mention all the currency pairs, but we're running a bit out of time. So no questions I see so far. That's great. Everything's clear. Last but not least, maybe quickly, the euro pound still divergence between the bottoms and support is close by. I think this could be more of a bouncing spot. Price is making actually a sort of pattern, lower high, higher low. So it could be a contracting triangle. Maybe a bounce at the S1 or S2 could be interesting to look for. All right, so for more webinars, feel free, for the MetaTrader 4 Supreme Edition, of course, feel free to go to platforms, click on this, and get those indicators, among other things. For more analytics, go to analytics. That's pretty clear, I guess. And education, go to Forex and CFD webinars. You'll be able to find the webinar on entry tactics next week, Thursday, which is here, Live Trading Lab. No, sorry. Here, Pro Learning Lab, excuse me. But tomorrow, Nenad is also back with his Wednesday live trading session, so feel free to join that one. I'm sure he's looking forward to that. And that is, let's see, tomorrow and Thursday, I guess. Let me check the date. Yes, he has an expert opinion price action trading school training session, part 2. So that's next week, Thursday. And then next week we have more webinars, of course. So that's about it. Thanks for joining. Wish you all great trading, folks. Thanks for joining here. It was good to see you. Hope that you have a good trading week ahead. And, well, hope to see you soon. Cheers, everyone.